Hi, hello, welcome friends. In this video, I am going to discuss about some interview-based questions. So, now here I will bifurcate the questions into different category. If you are going for investment banking, they will focus on different questions, and if you are going for general accounting and fund accounting, they will focus for general questions. What are the general questions we will ask? What are if you going for hedge fund related? What are the hedge funds related questions over there? And what are the apex hedge fund position questions will be there, and what are the general finance and options questions will be there. And if you are going for this particular job role, and the answers will be means our questions will be maybe in these questions it may come. So here I am providing in a sequential act order. That is, here first questions will be general accounting and fund accounting basis. So here they may ask about yourself. So first question in any interview they will ask about your interview yourself only. So tell me about yourself, introduce yourself, whatever question. So now your response will be, I am currently pursuing. If you are pursuing any MBA course or CA course or CMA course or any work you are pursuing, you need to start with I am pursuing CA final, and while working in a CA firm, or my background includes my experience in audit. I have done this audit, I have done this accounting firms, and where I gained exposure to financial statements. So you need to mention that I have a knowledge about the exposure to financial statements, because if this fund accountants required the exposure in financial statements only, and compliance and risk assessment. So you need to explain that you have that exposure in that fields, and where my interest in fund accounting led me to pursue relevant courses to expand my expertise. So I have taken some, I have some interest in this fund accounting, so I pursued that some relevant courses from different persons, and I have expanded my expertise. So you need to answer that question in this way. If you are going for fund accounting, it is better answer. If you are going for investment bank, you need to modify some answer. So firstly, my name is this, and I am currently pursuing this, I am working this, and I completed this, and my background is including some experience in audit, and I have financial exposure in financial statements, compliance, risk assessment, and I am now interested in this account. I have exposure was pursued relevant course. I have a theoretical knowledge, and now I want to gain a practical knowledge. You need to explain in this way. And second question, now previously you are in audit firm experience and work related questions. So what is the work you have done? So you need to answer accordingly. So I have experience in audit firm where I have conducted financial audit, bank audit, statutory audits, ROC filings, income tax filings, and assessed internal controls and ensured compliance with accounting standards, IFRS, regulatory requirements. So whatever you have some experience, you need to add there. And my work involved analyzing the financial data, identifying areas for improvement, and providing recommendations for clients. So whatever the client is asking, I have providing based on their needs. So you need to mention that client recommendations. So means you are dealing with client is main required in this IB process. Next question may be, why did you join CA firm while pursuing CMA? So if you are pursuing CMA, now you are joined as in a CA firm. Here the CA firm is for CA persons who need to do mandatory articleship of 2 3 years. Lastly, now it will be 2 years, but whereas CMA persons need to do a articleship of 6 months, in where the practicing CMA is required. But here the persons mm, going for CMA qualification, and he is introducing himself as a CMA person, and he is working in a CA firm. Then answer may be, working in a CA firm is complements my CMA studies by providing practical exposure to various aspects of accounting, auditing, etc. etc. So you need to gain the knowledge of accounting and auditing in a practical way. So that I have joined in CFM, and it also allows me to apply theoretical knowledge to real world scenario. I have a theoretical knowledge already. I have existed theoretical knowledge. Now I have applied that theoretical knowledge into real world scenario. So enhancing my overall understanding of financial management, I have joined in a CFM. You can explain in that way. And some other questions maybe, why did you choose the fund accounting course, and why are you changing from an audit firm? This is the main scenario question. So this all CA persons, related persons, interview persons will get this question. So simple question is, why you choose the fund accounting course? You are in already in audit firm, so why you are changing from audit firm to fund accounting? So here answer will be must provide in a beautiful way, because now answer may be, I choose the fund accounting course to diversify my skill set and align with my interest in investment management. So you need to develop that, you need to diversify your skill set and align interest in investment management. So if you have an interest in investment management, and from transiting from audit to fund accounting allows me to focus on specific financial product. So if you are in an audit firm, you do not have a specific financial products, you do not have focus to in specific financial products. So where here fund accounting, you need to focus on specific financial products, deepen my knowledge and contribute more meaningful to financial decision making. So here you can take the financial decision making. So that I have changed from audit firm to fund accounting. So because I chosen fund accounting, why means that to diversify my skill set and align with my interest in investment banking, investment management. So I have an interest in investment management, so that I have diversify my skill set. Now I am transiting from audit to fund accounting. It will focus and it will allow to focus on specific financial product. Then I will deepen my knowledge on that course, and then I will get meaningful and contribute my meaningful to financial decisions. In that way you may answer. And when, where did you take the course and why? Now you need to take, I took the fund accounting course at some interview institute or some universities where you have taken some courses. You need to mention that, and you need to see that institute missions and visions also. So is it some courses will be provided in online, which you will generate a certificate easily. So don't send that type of a certificated into this person. So you need to mention the institute or university where you have taken course, and to gain comprehensive understanding of fund structures, accounting principles specific to investment funds, and regular compliance. So this knowledge is crucial for my career growth in the financial industry. So you want to stay in a financial industry, so that you have taken fund accounting course from so and so institute, and you have gained some comprehensive understanding of fund structure and accounting principles to specific funds. You need to mention the answers in type. And next, simple questions, explain the concept, accrual concept and entries. So what are the accrual concept and response? Accrual concept means recognizing the revenues and expenses when incurred, irrespective of when cash transactions occur. So it is not required cash transactions is occurred or not. You need to recognize that expenses and revenues it whenever it was accrual. For example, if you go for recognizing revenue when services are provided involving accrued revenue account debit to revenue when his service provided is. And next, what is the prepaid and provide general entry? So prepaid expenses means what? Prepaid expenses means it are costs which are paid in advance but not yet be incurred. So you have not yet incurred but you have paid, means cash outflow will be there. The general entry may be prepaid rent account debit to cash or bank account. And next here some question, IFRS and GAAP differences. What is the differences? IFRS means international financial reporting standard, and whereas GAAP means generally accepted accounting principles. Here the difference in areas will be like inventory valuation method, treatment of development cost, and the recognition of contingent liabilities. Here there may be some differences will be there in that cases. In IFRS they will take in one way, and in GAAP they will take in another way. So how can we choose it, IFRS or GAAP? So based on where you are located, in based on that you need to follow. And what is EPS? EPS means earning per share. It is a financial metric. It will indicate the financial portion of company's profitable attributable to each outstanding share of common stock. Firstly, you need to explain the formula better way. See, formula will be, what is the formula? Formula will be net profit after tax divided by number of shares outstanding. That is the formula. So you need to derive that formula in better way. So it is one financial metric. It will indicate the company's profit attributable, means numerator, you are explaining about numerator, company profit attributable to each outstanding shares of common stock, which is dividing in denominator part. It is calculated as net income minus preferred dividend and dividend by the weighted average number of common shares outstanding. Next, European waterfall provision and an example. So here the European waterfall is a distribution model in a private equity, and means European waterfall provision means European waterfall provision model in private equity. It prioritizes the return of invested capital before allocating the profit. So it is one model in private equity. We have European waterfall model and American waterfall model. In both cases, where European waterfall model prioritize the return on invested capital before allocating the profit. For example, if you go for a fund, he generated some 10 million in profits, but it has 8 million is needed to return capital, that is principal part. Now only 2 millions will be available for profit distribution. This is European waterfall provision. Whereas next question, depreciation and amortization. Depreciation and amortization means both depreciation and amortization means allocate the cost of an asset over its useful life. So you have one asset, and asset has incurred some cost. That cost will be allocated over useful life of the asset. That is meant by depreciation and amortization. Here depreciation will be applied to tangible assets like building and etc., and whereas amortization will be applicable to intangible assets like patents or trademarks, etc. Next, land depreciation. So land depreciation means the land is typically not depreciated, as it is a indefinite useful life. So for the land it does not have a definite lifetime. So therefore there is no depreciation entry for land. Next, question number 31, master feeder structure and an example of intercompany assets. So here master feeder structure means what, and example for intercompany assets means what. First of all, master feeder means structure involves a master fund and feeder fund. So in master feeder structure we have two, one is master fund and one is feeder fund, and here allowing investors to pool capital in a tax efficient manner. So what it will do, it will allow investor to pool capital in tax efficient manner. For example, here intercompany assets might be master fund investing in the feeder funds shares. It may be intercompany example. And whereas, so an example means intercompany assets might be the master fund investing in the feeder funds shares. Next, you need to give prepaid entry, means they will give you some scenario, and that is rent of assets is $24,000 and quarterly expenses will be posted. How you can post that entry means, then for prepaid rent, the initial entry is debiting the rent amount, that is prepaid rent account debit to cash or bank account. It has seen in previous question only, but here for quarterly entries might involve debiting rent expenses and credit prepaid rent. So normally the entry will be rent account debit to cash or bank account, that is the normal entry. But when we have prepaid entry, now we need to adjust that prepaid entry to this main entry. So rent expenses account debit to prepaid rent account will be the prepaid entity is gradually recognized over a time. Next, equalization and rebalancing. Rebalancing means, here equalization is a mechanism in private equity. It will be there in private equity to ensure that all investors receive the same effective rate of returns. So it will ensure that all investors will get the same effective rate of return. It is known as equalization. Here we need to do that. Rebalancing means involves adjusting your portfolio asset allocation to maintain desired risk and return characteristics. So equalization means in private equity, it will ensure all investors will receive same effective rate of return, that is equalization means. Whereas rebalancing means involves adjusting portfolio asset allocation to maintain desired risk and return characteristics. Here it will adjust the portfolio assets in rebalancing, whereas equalization, it will ensure that all investors will get the effective rate of returns. Next, in hedge funds. So what are the questions will be there in hedge funds? In hedge funds there may be hedge funds in hedge funds. First, in every question you need to go briefly about a hedge funds. So what do you know by hedge funds? Where do hedge funds invest are different for just a second. Now come to point. So hedge funds related questions. So go briefly about hedge funds. I think it is better we will go in here. So second stage kada. Yes, hedge funds means what? Hedge funds means briefly about hedge funds. Hedge funds are investment vehicle. It is hedge fund means investment vehicle pooling capital from accredited investors. Accredited investors means who is a high net worth individual person, and it will utilize diverse strategies like leverage and derivatives for higher returns. Hedge funds will try to get the higher returns, and here it utilizes diverse strategies like leverage and derivatives for higher returns. For example, if you go for quantitative hedge fund employing algorithms to identify short-term market inefficiencies. Next, where do fund invest? So hedge funds will invest. Hedge funds investments means hedge fund invest across various assets, such as it may go for equity, it may go for fixed income, it may go for commodity, and it may go for derivatives. So aiming will be maximum returns will need to get. And whereas investing in mixed global stocks, government bonds, and currency derivatives for portfolio diversification. Next, what is difference between open-ended and closed-ended funds? So difference between open-ended and closed-ended funds means open-ended funds issue or redeem shares based on the demand. So based on the demand, this will be go. Means open-ended funds means anytime will be enter, anytime will be exit. So they will be there for exit and entry at any time. in open-ended fund, whereas closed-ended funds here fixed number of shares traded on stock exchange, and here it will launch the fund for year maturity term. Up to that maturity, it will not allow to enter and it will not allow to exit. It may be 3 years, 5 years, 10 years, the fund time may be. And whereas, for example, if you go for the mutual fund, it will be open-ended structure, and it will adjust shares in daily basis, where it will need to calculate NAV on daily basis. Whereas if you go for closed-ended funds like ETF, that is exchange traded funds, which have fixed share counts. Next, what is HWM? Explain with an example. HWM means high water mark. High water mark means where highest NAV point performance fee are charged on profits surpassing this level. So HWM means it is NAV, and which that NAV is in highest points, which reach the highest point, and performance fees are charged on profit surpassing this level. Performance fees will be charged on profit surpassing this level. So for example, if hedge fund NAV reaches $2 millions and performance fee apply on return exceeding this mark in subsequent periods, that is high water mark. And whereas fifth question, what is GAV versus NAV? So NAV means that net asset value. GAV means gross asset value. Here GAV is the total value of the fund assets excluding liabilities. NAV means GAV minus liabilities. So whatever the value of fund assets minus excluding liabilities, it will become GAV, and GAV minus liabilities, it will become NAV. For example, if the fund has 150 millions in assets and 20 millions in liabilities, the NAV is 130 millions, and gross asset value means 150 million is assets. Next, what is difference between hedge funds and mutual funds? So hedge funds means it is less regulated and employ complex strategies and often cater to high net worth investors will be there in hedge funds, whereas mutual funds will have more traditional strategy, and here more performance persons or retail investors will be exist in mutual funds. Here the amounts may be in less amount also you can enter into mutual funds. And for example, hedge funds may engage in short selling and use leverages, so they may go for different strategies they will go for. So for example, they may go for short selling and they may go for leverages, whereas mutual fund means might focus on long only positions. Next, difference between futures and options. So futures means what, options means what? So futures obligate buying or selling at a future date. So future means what, obligate buying or selling at future date, and while option means provide the right, that is not obligation. So future means you will get the obligation in future date, you need to buy or sell, whereas option means providing a right. Here the right may be to buy or to sell at predetermined prices. And whereas here if you want to example, buying a future contract for crude oil, it will obligated the purchase of oil at a future date. So if you enter into future contract to buy the crude oil, you need to obligate the purchase of oil at future date, whereas while buying call option means and the tech stocks provide a right to purchase shares at a specific price. So you need to purchase the specific price. And whereas a short call, or explain short call. Short call means what? Short call means selling a call option without owning the underlying asset. So you do not own that underlying asset, but you will sell that call option. For example, a selling call option for company X stock with a strike price of $50. So for anticipating the stock value will not reach or exceed $50. So short selling means you do not have the owning on that underlying assets, you are selling that call option. Whereas swaps means what? Swaps means explain swaps, especially interest rate swaps with an example. So swaps means involve exchange cash flows. So interest rate swaps which fixed for fixed to floating rate payment. So swaps means we have exchanging the cash flows, where you may go for interest rate swaps, you may go for currency swaps, you may go for TRS total return swaps. Here for example, if you go for rate swap, you may swap company A fixed rate and company B has floating rate. So you want to manage that interest rate, you can go for swap. And next, what is corporate action and its type? Here corporate action means, or it is one event, it will affecting the company's stakeholders. So whatever the actions, that whatever the events done by the company, it will affect the company stakeholder. It may be such as mergers, dividends, stock splits, etc. So for example, a company is splitting its shares 2 for 1, having the stock price and doubling the number of shares. Next, enter the accrual expenses is 100 and paid 150 at the time of payment. What is the entry? So we explained about accrual. Now we are giving case scenario. Here initially debit the liability, credit the expenses, that is payment rewards the liability. For example, paying 150 involves debiting accrual liabilities and crediting the cash will be there. And why do you quit the previous job and learning? And he will ask. So for example, if you are going for CA IPC persons, they will ask this type of questions. So you are leaving previous job and the reason for previous job means what you have learned. So here you may answer in a way, seeking new challenges and professional growth in investment banking. So why you choose an investment banking means here we have new challenges and we have professional growth in investment banking. Example, previous job lacked opportunity for skill development and career advancement. So it does not have a skill based, it is routine work is there in previous care. And next, how do fund houses classify funds? So here based on investment objectives, risk tolerance and asset classes will be there. So fund house will classify the funds based on its risk tolerance, based on its objective, based on that it will for example classifying the funds in their growth equity, fixed income or balanced based on their investment strategies. Next, share class funds or multi-class funds. So here different class of shares within the same funds, often with varied fee structure. So it may have different fee for different funds even though they are in same fund. So for example, offering class A shares with front end load for immediate investment and lower annual fee, and class B shares with no upfront fee but higher annual expenses. And next, it may be relating to these questions will be relating to this apex hedge fund positions. So now we have seen the hedge funds, now we are going to apex hedge funds questions. Here first question, normally we have introduce yourself. So we are completed hedge funds, now we will going for apex hedge fund position. Here hedge fund position means here introduce yourself. So introducing yourself means firstly you need to hello, hi, I am so your name and I hold this qualification, I have background in this field, I have experience in this relevant experience, and I am currently focused on your current pursuit such as enhancing my knowledge in finance and investments. Next, what do you know about hedge funds? So simple question. Hedge funds means investment funds that pool capital from accredited investors and employ various strategies. So here it may include in leveraging and derivatives. So it will go with the different strategies. So to generate high returns is the main motive, and they often invest in a wide range of assets and are also known for their flexibility and active management. Where do hedge funds invest? So this is a question also we have seen in previous, I think so. Here, hedge funds can invest in various markets. It may include equity, fixed income, currencies, commodities, derivatives, etc. So, investment strategies may involve long or short position, arbitrage, and other techniques to capitalize the market inefficiencies. And what is the expected return in hedge funds? This is the main question. Hedge funds returns vary widely based on strategy. So which strategy you have taken, so based on that strategy you get the return. So you did not give the direct point 15%, 20%, don't guess the percentage here. In hedge funds you need to answer in a way the return may be in based on strategy, and where while there is no fixed expected return, they often aim to outperform traditional investments. Returns depend on the market condition, risk management, and specific approach of the fund hedge fund. Next, here what is the different for hedge fund versus private equity? Here hedge funds are actively managed investment funds with a wide range of strategies, so often providing liquidity. Private equity involves investing in private companies with the goal of long term value creation. So hedge funds have actively managed investment funds with a wide range of strategies. So it have different strategies. It will manage investment funds in active way, and it have providing liquidity also. Whereas private equity, it will invest in private companies with the goal of long term creation, and it does not have a liquidity. It will invest in a illiquid assets. Next, hedge funds are typically more liquid than private equity investment. Next, what do you know about derivative? Derivative means always simple meaning. Derivative is a financial instrument, or it is one contract, and its value will be derived from an underlying asset. Here the underlying assets may include options, futures, swaps, and allowing the investor to speculate on price movement, hedge risk, and manage the exposure. What is seventh question? Call option and put options. Here call option, put option means a call option gives the holder the right, so company will get the right but not obligation to buy an asset at a specified price with a predetermined period, and means here company will buy its asset at a specified period within predetermined period. And whereas put option means here the holder will get the right but not obligation, why, to sell an asset at a specified price within a predetermined period. Call option means it will be a bullish market, and put option will be a bearish market. Next, accrued expenses and prepaid expenses general entries. So accrued means cash not yet flow, prepaid means cash paid in advances, so cash flow in advances. They have both impact the NAV by affecting the expense recognition and asset valuations. So in accrued it will be debiting the expenses account debit to crediting to liability account, whereas prepaid expenses will be future expenses, it will be recognizing. And ninth one, what are the bonds and types of bonds and interest calculation of bonds with example. So bonds are debt securities where investors lend money to issuers in change for periodic interest payments and return on principal at maturity. So types may include government bonds, corporate bonds, municipal bonds, etc. etc. So bonds means first of all it is a debt security, and here investors will lend money to issuer in exchange of periodic interest payment. So they will pay the periodic interest payment plus principal, return on principal at maturity companies will repay. And here they may include different types means government bonds, corporate bonds, municipal bonds, municipality bonds, etc. etc. And interest of bonds is calculated based on using the formulas will be there. Interest is equal to face value into coupon, so always use the face value and coupon rate for calculate the interest. So face value is the main important. And for example, if your $1,000 face value bond is there and coupon rate will be 5%, then the annual interest will be 1000 into 5%, it will become 50 rupees. Next, difference between the mutual fund and hedge fund. So mutual fund means more regulated and it has a restriction on trading strategies, where it has open retailer investors will invest. And here hedge funds means fewer regulations will be there, various strategies will be there, and open accredited to in created creditors. Hedge funds are often charge performance fees also, where mutual funds will charge management fees. So in any fund, management fee will be the mandatory fee they will taken. And next, forwards, futures, and difference between that. So forwards and futures are both derivatives. Firstly, if both are derivatives, and it will use to hedge or speculate on future price movement. So they will why they use these derivatives to hedge or to speculate on future price movements. So the main difference is that forwards are customized, that is tailor made, whereas private quantity contracts traded over the counter, so it will traded over the counter, where futures are standardized contracts traded on exchanges, so it will traded on exchanges. Next, company founder, incorporation date, and business activities. Here now you need to provide some specific details of the company and uh, company. They will ask about the company's founders, incorporation date, business. If you know the answer, you need to specific details of the company and its founders and incorporation dates, and primarily the business activities. So it is custom based on the companies you are discussing. So if you are go for one company, if you are go for Citco company, you need to answer accordingly. If you go for BNY Milan, if you need to answer accordingly. If you are go for Japan Mega, if you answer, I will be in that base only. And next, general finance and options type questions. Here they may be uh, fourth, general finance and options. So first question is always self intro questions. So here you need to answer, hello, my name is this one, and I hold this qualification, I have the background in this field, and I have worked in previous experience, and I have strong interest in this area. So currently I am seeking opportunity to apply my skills and knowledge in the dynamic environment. Here investment banking in the dynamic environment. Next, difference between private equity and hedge funds. So PE means private equity, HF means hedge funds. So private equity involves investing the private companies for significant ownership and long-term value creation, whereas hedge funds implies various strategies to generate higher returns and often in public markets. So in hedge funds they may use leverages, derivatives also, whereas PE focused on ownership and long-term basis. What is put option? Put option means a put option is a financial contract that gives, here put option holder will get the right but not the obligation. Here what to sell an asset at a predetermined price with the specified period. So here person will get the holder will get the right in put option, and here the price to sell an asset at a predetermined price within a specified period, and it provides a form of downside protection and allowing the holder to benefit from a potential decline in the asset value. Next, question number 4, side bracket. What is meant by side bracket? Side bracket means it is one mechanism which is used by hedge funds. Why? To segregate the illiquid assets or hard to value assets from the main fund. So from main fund it will segregate some assets, illiquid assets, hard to value assets, and this helps in managing liquidity and ensure fair treatment of all investors. So it will ensure the helping liquidity and it also ensures fair treatment for all investors. Next, what is record date and ex date? Here the record date means is the date when investor must be on the company's books to receive declared dividend or attend a shareholders meeting. That is record date. Record date means here the investor, the person who is the investor is there na, that person must to be in company's books. So in if the person he is there in company's books, he will receive dividend, whatever the dividend is declared, and he attended shareholders meeting, then the recorded date will be that one. And ex date means is the date when a stock begins trading without a right to upcoming dividend. So ex dividend means it is the date when the stock begins trading without the right to the upcoming dividend. Investor purchasing shares on or after the ex date will not receive the dividend. So if the investor is purchased on or after the ex date, he will not receive the any dividends. Here ex date means where stock begin the trading and without the right to upcoming dividend. So whatever the upcoming dividend he is announcing, he will not get that amount right. Here whatever the date means on or after on ex date or after the ex date, if you are going for that company, you will not get any dividend. So if you are purchase that shares before itself on recording date, if your name is entered in the books of accounts and you have right to dividend, you have attended shareholders meeting, that is recorded date. Next, management fee and journal entries, accrued and payment related. So accrued management fee entry will be management fee will be expense and creating the accrued liabilities, and whereas when the fee is paid, the entry will be accrued liabilities will be debited and credit the cash or bank account. Next, seventh question, bonus issue and rights issue. Here voluntary or mandatory corporate actions, what are there? So bonus issue means is voluntary and involves issuing additional shares to existing shareholders. So bonus issue means voluntary and it involves additional shares to existing shareholders. So whoever the existing shareholders is there on that day, they will get the extra shares. And here the right issue is mandatory, but bonus issue is not mandatory, it is voluntary basis. Where here in right issue, giving existing shareholder the right to purchase additional shares before going for public. So both are corporate actions only. Next, question number 8 one, waterfall provisions. So waterfall provisions outline the order in which cash flow are distributed among different classes of investors or stakeholders. Next, it establishes priority for payment such as return on capital employed, preferred return and profit sharing. So waterfall provision means what? It is one provision, it will explain about order in which cash flows are distributed among different class of investors or stakeholders. So in that provision we will discuss, and here establishes a priority for payment, so such as capital and after that preferred return, after that profit sharing. And ninth one, hybrid funds. Hybrid funds means combined feature of both equity and debt funds. So here offering diversification, they invest in a mix of stocks and bonds, so providing balanced approach to risk and return. And they will ask why this company you have chosen. If you are going for BNY Milan, why BNY Milan? If you go for Citco, why Citco? If you go for Apex, why Apex? If you go for PNB Paribas, they will ask why PNB Paribas. So I have taken some 2 or 3 companies name. It means if you go for Citco, like Citco is a renowned for its expertise in fund administration and financial services. So it has expertise knowledge in fund administration and financial services. So I am attracted to Citco commitment to innovation, client services and its global presence, offering an excellent platform for professional growth. So you need to use the answer. So it has the expertise knowledge and it is providing financial services and it is in commitment to invest innovative client service and global presence. So it is offering excellent platform for professional growth like me. So I am also one professional growing person. You need to explain in that way. And why do you want to change from audit firm to company? So we have explained that while I have value the experience gained in an audit firm, I am seeking a role in a company to apply my skills more directly in a focused environment. So now I am excited about contributing to a company's growth and strategies. So in audit firm, what is the your roles? Directly focusing on environment. So they will give the questions and you need to answer that question. So by here we will contribute growth and strategies. Now main question will be, are you okay with shift timings if extended beyond 9 hours? Response, you need to answer yes only. I am open to extended working hours if required. So I understood that certain roles may demand flexibility, and I am committed to meeting the demands of that position. So I am okay with that, because the extended working hours will be required, because I have understood that roles my demand flexibility, and I have committed the meetings the demand of that position. Next up, option contracts. What is the option contract? So option contract means is a financial derivative that gives the holder the right. So in option contract, holder will get the right, but not the obligations. Here to buy call option or sell put option. So company may buy call option, company may sell put option an asset at predetermined price within a specified period. And what mean by corporate action? Corporate action means we have discussed. So it is an event, and it will be initiated by public traded companies. Then the whatever the events taken by that corporate company, it will impact its shareholders. So typically it involves significant change in company structure and financial status. So it may include stock split, mergers, dividends, and rights issues. Next, there may be different dates will be considered in corporate actions. Yes, different dates will be there. Key dates in corporate actions, it include announcement date, ex date, record date, and payment dates. So these are the dates are crucial for investor to understand their entitlement and the impact of their position. So this date is main important for various corporate actions. One is announcement, when the company is announced. One is ex date, on or after X date your name will be there, you will not get any dividend. Recorded, if your name is there entered in the books, the date will be recorded, from here you will get the dividend. And payment date means whenever you get that payments, that is the case. And you an immediate joiner, so it is related to if you have any contact in outside companies, outside there is any contact, but they will asking. So I am open to discussing the joining date. I understood the importance of a smooth transition and would be willing to align with a company's requirement. Now if you given in a resume, they will go through with the resume. So provide brief overview of your educational background, work experience, and key skills, whatever highlights your achievements and experiences relevant to position. And elaborate your previous work. So whatever the previous work you have done in previously, you need to elaborate that. Provide details insight into previous work experience, emphasizing achievements, responsibilities, and skills acquired. So showcase how your experience align with the requirement of the new roles. And if you ask for another company, what is why this company only, so you need to attract this company. It has reputation, and it has leading from specific industry, and it has company commitment to innovative client service and opportunity providing for professional development will be there. And after that advanced finance, and after that we will discuss about related to excel, basic excel questions, and after that we will go for advanced excel questions. It will be there in next video.